Hey guys, I want to do an update here, global macro. Some big moves today, all right, across a lot of different markets. And I was kind of sensing a turn in the markets yesterday, all right, and then today we got some follow through. So I think we had, whether you're looking at stocks, bonds, dollar, the euro, I mean everything's connected. And I'll show you here in a second. Um, but I had a big day, and that tends to happen when you catch a big turn, all right? So let's just start with the dollar. All right. So even this morning, it's classic. You have on Bloomberg. Look, I mean, look, a smart guy from Credit Suisse, I think it was his FX analyst talking about, it sounds great, all the storytelling about the UK, et cetera, for why the dollar should remain weak. But at the end of the interview, I mean, he's asked, what would you do with the DXY now to make money? And these guys are saying I would stay short the dollar. I mean, this has been a 2 3 week move. That's just an intermediate term pullback within the context of the big picture uptrend. And sure enough, today, these are levels in the dollar you want to start thinking about being long again. Same thing on the euro. Last time we were at 108. Everybody's talking about higher euro. We go to 105. Everybody's short euro. And now we're back here at 109 and everybody wants to be short the dollar. I mean, it's just the complete opposite of, from a timing perspective, what you want to do. When we go to the weekly chart, we talked about this on our team and in the live room. There is no reason to be long-term bearish the dollar until you get below 96, 97. That's where we broke out from. All right, we have the bands in this wave formation, as we call it in our model, right here at 97. And other than that, these are just intermediate term pullbacks. All right, so you want to keep playing the dollar from the long side. And yesterday you had a bottoming tail right in the location of the higher lows. All right, and then today we had follow through. So if you get the dollar above the 8 here, we can easily go back to the 30-day here at 101 area. So you can see that in the euro, which is obviously the dollar index is mostly euro. You can see the reverse of that. All right, failed right into the 200-day. I increased my course short over 5 times today intraday, and then took some profit into the low. And the reason being is that we failed right at the 200-day. This prior lower high is over here from the end of last year, right, on the election. Oh, this was the election. But this lower high from last quarter at the end of the year, boom. So this is the right area to fail and get a move back down. Again, it's the same thing as the dollar. You got to get back below the 8, which is basically a breakdown on the hourly and 4-hour. That's lower lows that you need to confirm that a new intermediate term downtrend is taking place. We'll see if we start to get more of that tomorrow. But you had the dollar hold, the euro start to fail. This is actually where I saw the turn first, was in stocks. All right. This was a bottoming tail yesterday. The daily cycle turned up. Can't remember what our weekly cycle was. Weekly cycle is still coming lower. But we talked about this weeks ago. This was the first initial crack in a bigger picture pullback as far as the intermediate term. And that we could go to 23.20, and then at 23.20 you got to kind of wait and see how the market reacted. We had this real money candle, we call it in the model, right off our pie line, which is a concept I developed, and boom, you got the follow through today. You're a little bit overbought into the close. And so the way I played that was I covered my shorts earlier in the week, sold out of my 23.20 puts, went long the NASDAQ yesterday and today, added to it today. I mean, but the NASDAQ looks poised to make newer highs potentially. So this is adding, taking some off, adding, taking some off into the close. All right, same thing now. Stocks started to move first, or reverse first, and then treasuries followed today. So yesterday we had a lower high in tens, but again, we're back to levels where you didn't want to be getting all bulled up on treasuries at the top end of the range. I mean, this is where you wanted to be a seller here. This is where you want to be a seller here. This is where you want to be a seller here. Um, Here we failed right back at the upper bands, we call that. I mean, you want to be a seller here and covering down here. So here we are again. This is a bearish engulfing pattern, and I doubled my treasury short in 10s today. And even if it backs up on me, I'm going to start looking to short more duration, go out 30s and potentially even ultras. All right, so getting more short, still out of the money on the core short here, but I'm starting to see signs that treasuries are rolling over again also. And then lastly, we did a great job with the VIX. All right, you were very overbought on the VIX. We are still in a long-term bull market for U.S. stocks. There's no reason to think that volatility was in a long-term type of breakout scenario. So this was a gift to be short, and we played that UVXY on the long side. I mean, I didn't have a single losing trade last year trading this. So I like to play this name only on the short side for reasons my traders know. But we were buying puts yesterday into the high, and then today it's all about covering. All right, but we were trading this on the short side. Short cover, short cover, short cover, short cover, short again. And then I have a core position longer term. I think you'll see UVXY probably down at 10 if stocks make new highs. This will easily get cut in half from the highs. All right, and then the other way to play this is short the front end VIX. So when you look at VIX futures, depending on the contract you're looking at, but we can absolutely see that. Oh, I got the wrong ticker now. This is just getting crushed. All right. This is what the front end of the VIX curve looks like. The front end futures front month. So you can go look at the different contracts, but essentially the way to play that in the ETF space is you go long SVXY. And so this has been a long-term uptrend. It doesn't get more bullish than that, and this thing will really move. I mean, last year we were down around 80. You're almost doubled already. And I think this can go to new highs. So I'm going to stay core long. But here you can see he was taking profit, taking profit. My delta was pretty much almost flat, only 25 into the highs. And then boom, I increased my position 10 times into the low here. All right, and then I added to it and took some profit there. And again, I think this is probably going to new highs. So anyway, guys, look, this is what we do all day, every day. We trade global macro, we day trade, we trade intermediate term, we trade long term. I teach you guys to trade the way, I mean, I've had institutionally 10 years staring at the treasury market all day, all night, trading billions in size, working orders for and with all the primary dealers and the biggest of the big. I had Goldman Sachs cover me in my overnight sessions along with a couple other Southside banks. So know how to take real risk, and this is what I teach my guys. But I was writing a note to them today. I mean, this is what's possible. Here's my SVXY trades. Right, that's over 8 grand today. Simple call ratio back spreads, some out of the money calls. Right, I have an options course that's available on my website. This is me taking some profit on the NASDAQ, up over 3 grand there. But this is me just having a simple conversation. I mean, to do 45 grand in a day, that's what it looks like when you learn to trade global macro, and especially when you can catch a big picture pivot or turn in the markets. So this has been the trend that's been working all year. Short treasuries, long the economy accelerating since the Trump election, long stocks. You've been trying to short stocks, you've been getting crushed. Short treasuries, long stocks, long the dollar overall, longer term. I mean, you got to pick your places. You got to add and reduce. There's times to be more aggressive. There's time to take in your exposure. But long dollar, short euro, and then again, we've been in a long-term downtrend for volatility. So this last 2 weeks was a gift to get back on the short side. Um, it is what it is, guys. If you're interested in joining us, I sent this message to 280 traders. I have an active trader, real-time service, and then we have my full access team. We're about 30 traders there. We just really getting started on that team. We just started that this year, so we're already growing like crazy. But if you want to join us, go to jenkinsrm.com, jenkinsrm.com. You can learn about our services. I have a real-time alerts product. I put all my day trade, swing trade, long-term trades, everything I'm doing in there. It's only 150 bucks a month. So, I mean, if you can't follow along on pick your asset, stocks, gold, the dollar, euro, volatility. I mean, pick whatever you want, but one trade is going to it's probably going to pay for the service for the entire year. If you're interested in how we trade options, I teach my call ratio back strategy. You can purchase that there. It's on demand. If you're still trading stocks, I mean, you're kind of wasting your time. You're tying up all your capital. You have way too much risk. You can do the same trades with a lot less capital, a lot less risk, and way more upside if you learn the right way to trade options around individual stocks. And then you can do the same, obviously, in futures, those asset classes too. But then this is my full access team. I mean, this is one of the main goals of why I left the desk that I ran at the last couple of my firms, because I wanted to start an independent trading team, both professional, independent, globally, and teach people the importance of timing and having a real model and a real process. So if you're interested in learning more about that, we've got video on here. You can kind of roam through the site. All right, guys. So look forward to seeing what the rest of this week brings. We'll see if we get follow through on what we saw today, but it's tough to get in front of long stocks, long dollar, short euro, up rates, down treasury prices. So we'll see. I'll talk to you guys in the morning.